Welcome everybody. This is Ed Mead talking, and this is my first podcast under the guise of talking to interesting people in the property industry. Most of you hopefully will know that I started up a viewings company called Viewer some time ago, and these podcasts will be broadcast or stored from the Viewer website. And that's VIEWBER, for those of you who don't know how it's spelt. And this is the first one we've done. So I am very pleased to welcome two people with whom I have some sort of a connection. One is Henry Pryor. Hello, Henry.
Hi.
Henry
As your parole officer, you mean?
Henry won't need much of an introduction, probably, but he and I go back a very long way, sometimes combative, mostly good news over the years. And the other person I've got here is a gentleman called Tom Tennant.
Hello.
That's with two N's. And Tom's father, funnily enough, was an old sparring partner of mine, 30, 40 years ago in the estate agency industry. And Tom now is the CEO of a company called Somerset Estates REIT, which I think is possibly changing its name to UK Buy-to-Let REIT.
Yes,
which is a bit more of a clue in the name, possibly. But and it's a very interesting departure, and one of the things that I want to talk about in some depth, really, is the lettings market and changes, and what the government has been doing to try and persuade people to sell their buy-to-let investments and perhaps become first-time buyers. And it's quite interesting that there have been some figures released this morning that apparently an extra 120,000 first-time buyers have bought since the stamp duty changes were made last November. Perhaps I can just start by asking you, Henry, 120,000 extra first-time buyers, is that quite a lot of extra buyers? You're very, very good normally with your stats. Do you have any idea whether that represents a big increase?
Well, it just shows that there's still a lot of enthusiasm from first-time buyers, this aspiration, this national obsession we have with wanting to get onto the housing ladder, this seemingly indoctrinated idea that we must all own our own homes, and there clearly is no end in sight, it would appear, thanks to the government's assistance through things like Help to Buy, and indeed the tax changes that you've just mentioned. So for those who want to get on to the lowest rungs of the housing ladder and want to own their own home, it still appears that you're not alone, and there is some enthusiasm out there. Whether that's a good idea, I suspect we might cover in due course.
Yes, I mean 120,000 in what? That was November, wasn't it? So that's the thick end of a year. So that's 120,000 first-time buyers. I can't work out in my mind whether that is a lot. We reckon there are something like, 1 million transactions a year?
On average, roughly a million every year. It comes and goes depending on the economic cycle, obviously. And 100,000 is an appreciable amount, but clearly there is an awful lot of other people who'd like to own their own home and who'd like to get onto the housing ladder, and it's one of the definitions, amongst many, unfortunately, of what the national housing crisis is. For an awful lot of people, it's the ability to get on and buy their own home.
Yes, I've always been a little bit of I always try and row back a little bit from the word crisis. But in terms of ownership or living in properties, not ownership but living, you, I know, have always been an exponent of renting. I think you actually rent at the moment, don't you?
Still do,
and,
yep.
and I did for 25 years, and I
Yep.
was more than happy. I was investing in my business, and you, as most people who were listening to this know, are a buying agent principally, but you've become a big independent property commentator as well. But you tend to look at this. I always quite like some of the stuff you do by virtue of the fact that you tend to. You've always called yourself a contrarian, but that's actually, of course, because unlike most people like me who tend to talk about the property market from an agent's perspective, you're looking at it from the other perspective.
I've been called all sorts of things, not always on an open mic. But yes, you're right. I mean, the important thing to remember is that housing is something that is very, very important to all three of us, and I'm sure it will be to all your listeners too. It is a hugely important part of the national economy. It starts from the premise that we all need to live somewhere, whether we own it or rent it, and that's essential for everybody. The nation's 27 million homes are scattered across the United Kingdom. Are they all in the right place? Are they all affordable? Are some of them affordable? And can people who want to rent or buy them still do so with confidence? And an awful lot of things that impact on that, the government's intervention and the changes that they bring about, whether it's in the rental sector for the pressures that have been brought to bear on landlords over the last 4 or 5 years, whether it's efforts that the government have gone to try and clean up the ownership of property and the influence of dodgy money from overseas. I can spend hours, I'm afraid, boring people about the significance and importance of that. And one of the reasons I go and talk to people at the Home Affairs Select Committee about money laundering is because we have a market that is globally recognised and respected. People can, in the United Kingdom, buy, sell, rent and let property with confidence without worrying about whether they're passing their money to somebody who's not going to give them what they're expecting in return. And that is so important and underpins our values.
Well, it is very important, and it's something, I mean, when I started as an estate agent in 1979, that was just after the Shah had
Second
been
World War?
Just after the Shah had been deposed, and actually there were an awful lot of Iranians arriving, and people have always liked living in London. And actually, you're talking to your point about how important property is to the economy. About 10 years ago, I remember talking to an economist, someone who was pretty well respected. He reckoned that UK property PLC was something like 10% of UK PLC. It's a big chunk of the industry. But if we can come back to Tom's sort of enforced area of expertise, Tom.
Yeah.
I mean, obviously, a lot of people here have probably heard about the fact that the government has changed the way that landlords can take advantage, or the amount of money that landlords can take out of their rental properties, and what they're allowed to offset, what they're allowed to offset in terms of their mortgage and wear and tear allowances. Can you explain just a little bit in words of one syllable for people listening what the changes were to the 2015 Finance Act?
I'll try. What's something that has amazed us is how few landlords actually know the changes that are coming in. We've spoken to quite a few, and we did a show a few months ago, a landlord show, spoke to about 1,000 landlords, and I'd say 40% probably didn't know about the changes, which I find amazing because they are quite fundamental. The main point is really that it's the mortgage interest relief. You're no longer allowed to take that relief from so say your mortgage was £500 a month, or £100,000 a year or whatever, and your rent was £200,000 a year. Previously, you were allowed to take the £100,000 out of your profits. Now you're no longer allowed to do so. So your taxable profit is the whole £200,000 of rent, but you've also paid out your mortgage, so you've only got £100,000 to pay that the mortgage and your tax bill. It is being phased in. It started this year, and it's being fully implemented in 2020, 2021, I think, off the top of my head. Which by then you'll have no relief at all. There is a 20% tax credit to make it a bit more complicated. But yeah, so by 2021, there's no mortgage interest relief on.
And for the majority of landlords out there, do you think that'll push them into actually negative income, if I can put it like that?
It will do, especially in London and the southeast, where the yields are quite tight. So if there is if rents do start falling, then it will push landlords. They'll start making a loss. Our accountant did a test on one of their clients, not us, luckily, who I think sort of £200,000 worth of income. Rental income by the time this is fully implemented, they're making £50,000 loss, give or take, simply because they're also getting rid of the wear and tear allowance. There's lots more legislation coming in. You have to spend a bit more money to get your properties up to a higher standard, which is probably a good thing. But yeah, I think by the time it's fully implemented, lots of landlords will be making a loss on their income.
Can we be clear on something, though? Forgive me, I don't mean to be too controversial in Ed's podcast, but only a third of landlords have a mortgage.
This is true.
So it's not the majority of landlords that are going to be disenfranchised or affected by this. And in fact, the majority of landlords won't see any change at all. And those who are receiving, landlords that are receiving, or that we're talking about receiving 200 grand's worth of income, must be a reasonably modest slice or even slither of the investor market.
Yeah,
not unimportant, but it is important to keep some perspective. This is legislation that's been brought in because the public or the electorate have asked for it. It's right up there. Property, as we know, housing has been at least in the top three of these items on the various elections we've had to suffer and endure over the last 5 years. And the government is doing pretty much what the government has been asked to do.
True. Well, there's a third of landlords. There's 2.5 million landlords in the UK, roughly, buy-to-let landlords. So a third of that's quite a large number. So it's going to be quite a few hundred thousand landlords will be affected by this. The £200,000 example is just to keep the math simple for my mind.
Hey, that works for Ed.
Yeah.
But I think it's fair to say that obviously what the reason for the 2015 Finance Act, and I know actually because I was one of the agents that the Finance Committee used to come and talk to as well, or actually not the Finance Committee, the Bank of England used to come to talk to. And they were very, very worried post the financial crisis that the number of people who were going to be affected by interest rate rises would mean that landlords were going to head for the exit as soon as interest rates went up, and that it was going to cause another financial crisis. Which, for exactly the reasons you've just espoused, Henry, that a lot of them don't need mortgages, and for exactly the reasons that you've just espoused, Tom, which is that a lot of people are professional landlords. They look at it very, very seriously. And by the way, a lot of people don't have much else to invest in these days because they're not getting a yield on anything. So property has proved to be very useful. I think it's fair to say that the seriousness with which the landlords take their investment in the industry means that they've been clobbered somewhat, what's the right word, out of context. They don't think to themselves, oh, well, we're doing a really bad job. And all you read about in the press is the odd, terrible landlord who does, who really, and there are some rogues out there, and they're not regulated, well, I don't think they're regulated at all, really, is a straightforward answer. In some boroughs, they are regulated. Some councils do decide they want to register them, but an awful lot of them, the vast majority of landlords aren't regulated. But it's only a very, very, very tiny percentage. I know I'm on the board of the Property Ombudsman. I see the figures. There really aren't that many complaints about about landlords. So it's very, very frustrating in some ways that the government have chosen to clobber landlords who are looking to have a simple investment. And a lot of them keep their investments because they've got kids growing up. They may want to move into the property, move out of their house at some point in the future. There are all sorts of reasons. But one of the principal reasons I've got Tom here to talk is that, of course, for a lot of the landlords out there who do worry about their returns and what they're going to do with their properties, even though they're being pushed by the government to sell to some extent, I mean, then maybe that's part of the reason why there are more of these 120,000 first-time buyers out there. They're looking for some way in which they can mitigate their changes. And obviously that's what you're all about. That's what Somerset Estates REIT is about trying to give, well, if I understand this correctly, they're trying to give a sort of wrapper to landlords who can switch their properties into the REIT. How does it work?
So, yeah, the whole point of setting up the REIT was to say to these landlords who will be affected by or impacted by the changes, well, we will, instead of buying your property for cash, we'll give you shares to the value of the equity in your property. So say your property is worth £200,000 with a £100,000 mortgage, you'll have £100,000 worth of shares in the REIT.
Sorry, Tom, just to be clear, you can get a mortgage in order to buy the shares in the REIT, can you?
No, you can't get it. Well, no. Well, you can.
Sorry, did you just say?
So if you have a mortgage on your
mortgage.
So if you have a property, a sort of two-bed house in Margate or something, worth £200,000, you have a £100,000 mortgage against it. We will buy that property off you. We'll pay the debt off using our own bank, and then you will receive £100,000 worth of shares in the Somerset Estates REIT. So that's how it works. So if you don't have a mortgage, then you receive the full £200,000 value. But if you don't have a mortgage, you're probably not going to be impacted by the Section 24 changes.
So what are the advantages to a landlord? Because obviously, post the 2015 Finance Act coming in, a lot of people were worried that they were either going to have to turn themselves into a company, or they were going to keep it in their own name. And there were obviously disadvantages either way with future CGT and rolling up this sort of thing. So how does a REIT, and obviously REITs have been around for some time, but how does this structure help landlords?
Well, one of the beauties of a REIT, which is why we want to become a REIT rather than a
Because can I just say that you've seeded your REIT with quite a large amount of your own family's property?
So we put the portfolio my father built up since 1981. So about £10 million worth of properties all into the REIT. So we
Sorry, just to give it some context.
Yeah, thank you. We're fully behind this. We've put our everything on the line for this. We think it's the way forward. REITs, I love REITs. They don't pay any tax, which is quite good. But the main benefit of REITs is they have to pay out 90% of their profits to shareholders every year, at least once a year. We'll be looking to do it quarterly.
Sorry, you just said they don't pay any tax.
No corporation tax.
No corporation tax. But if you were to swap your property into the REIT, so you had your £100,000 worth of Somerset Estates REIT, and you decided to sell it in 5 years' time, how would the benefit come? Would the benefit come from the increase in the value of the property they've sold into it, or the unit price of the REIT?
It would come up on the share price. So hopefully the share price goes up over those 5 years if we're good at buying things.
But if the share price goes from £100,000 worth of units to £500,000 worth of units, I presume you pay tax on that.
Yeah, there will be a capital gains tax. Yes,
right.
They have to pay tax on that. So, but it's a good way of mitigating your capital gains tax bill. Say you've got a portfolio of properties you've had for 20, 30 years. You've built up a large pregnant gain within those properties. By selling for shares, you might be able to roll over that gain, and you would only pay the capital gains tax when you eventually sell the shares. But in the meantime, you can sell off, £11,000 a year of the capital gains allowance. You can give shares to your wife, your children, things like that for inheritance tax potentially.
What can you write off, Tom, in the way that landlords would be familiar? You can write off your acquisition and disposal costs against. You can set them against. Sorry, not
so
it's
your base cost. So if you sold your property, it's all your base cost. So it's the purchase price, any building works you've undertaken, legal
your estate
costs.
agents' fees.
Yeah, exactly.
You can set those off
against your capital gains tax bill. Yeah.
Once it's in the REIT.
Well, when you eventually sell the shares, then your capital gains tax will be based on the base cost of your property. So everything rolled up as a normal.
But when you sold your property into the REIT.
Oh, into the REIT. No, so
can you put those costs against?
No, well, the cost of converting to the REIT. Do you mean, or
yeah, your disposal costs effectively?
Well, they shouldn't. Well, the disposal costs will just be lawyers' fees, because there's obviously no estate agent fees. They could be quite high, obviously, but that will all become part of the base cost. Yeah,
because the management of the REIT, who would be managing the property once it's sold into the REIT? Is that done by something that you guys already have in place? Do you have a management structure?
We currently manage our own properties, but we're looking at. There's obviously lots of tech out there to make life a lot easier for managing agents. There's Fixflow. There's a lot of these property management software which makes life a lot easier for managing large portfolios. So we're looking at setting that up in the next few months as we grow to develop a streamlined system to manage everything for us.
Okay, and that's something that you've gained experience of over the years.
Yeah.
And Tom, can I ask, one of the joys of property, as we know, and I'm sure all listeners are aware of, is the advantage of leverage.
Yeah.
If I've no longer got a mortgage or borrowings on which to magnify my hopefully profits, possibly losses, but hopefully profits, do I lose that by converting my investment into the REIT?
Yes, obviously you don't. Yeah, you can't borrow. You won't be able to grow your property by refinancing you can't be able to grow your portfolio by refinancing other properties.
I'm not talking about the refinancing, but if you've got your Margate house at 200,000, of which 100,000 is borrowed, your yield is based on your 100 grand's worth of capital rather than the 200 grand's worth of value. If I've now only got 100 grand's worth of shares in your REIT, does my yield go up to compensate for the fact that
we leverage, so we will have debt, so we do that on behalf of the shareholders. I can see
you're okay.
Yeah.
You're all right, Jack.
No, but the point is, I think the point Tom's trying to make here as a moderator, if I put it like this, is that the size of the REIT will be impacted and grown and therefore be more efficient by the fact that they are taking the borrowings. So if you see what I mean, the overall size of the portfolio will be inflated, and therefore the yields.
As an investor, one of the reasons I've got borrowings, presumably, is in order to magnify my return.
I understand that. But once it's in the REIT as a whole will do that.
So do I get that benefit?
Yes, because the REIT is leveraging itself to the same degree.
Okay.
I mean, obviously, if you've got a 90% borrowing against your property, which, thank heavens, very few people do on the buy-to-let side these days.
Well, let's say they had 50%.
I mean, 50% I think is about right.
And will you have 50% gearing?
Yeah, so REITs are limited to what they can borrow. So it's to do with the interest cover. The rent's got to cover the interest, I think, by 1.35 times, something along those lines. So it's give or take 50% LTV. We're currently at about 32, 35 on our portfolio. So we're looking to ramp that up and build it using that. But using leverage for landlords, because of the Section 24 changes, getting a mortgage for some landlords is less profitable. It's harder to leverage because you can't offset it. There's no longer that subsidy from the government to take away your interest.
But surely one of the other advantages of this is that one of the biggest negatives about property ownership is its illiquidity. The fact that if you're going to sell it, you have to sell the whole lot. I presume that if you've got money, if you've switched your property into the REIT, so you've got units in the REIT. At some point in the future, you'll be able to start selling down units and therefore take out smaller bite-sized chunks when you need them, rather than having to sell the whole thing. Is that an advantage? Yeah,
definitely. So you can't. It's hard to sell sort of 10-20% of if you got sort of that £200,000. You can't sell £20,000 worth of property. But if you have £200,000 of shares in us, you can sell £20,000 worth of shares.
Well, I can see the advantage. One thing which I'd be interested to talk about, which sort of follows on the back of this, really, I suppose, is in terms of reletting. So if you're managing a big portfolio within the REIT, you're managing the REIT and all the properties within the REIT. I'm fascinated to sort of talk really about some of the changes that are happening in lettings at the moment, and specifically the way that companies like Open Rent, UPAD, some of these companies are impacting on the costs associated with renting and indeed their market share. Do you have any strong feelings about that? I mean, I would imagine you're a bit of a traditionalist if you've learnt anything from your father, probably. But do you have any views about these changes, the online sector? Because one of the biggest issues with letting a property these days is that I think there's something like 150 legislative things you have to look out for when you're renting that might give the tenant an excuse to stay and make them more difficult to get out. All this side.
Bit of a minefield sometimes.
Provided that stuff is covered off, why wouldn't you think about using one of these online platforms which provide the paperwork and cover the basics?
So we did both last year. We have a property, 2 flats in Earls Court, which we'd refurbished. We used a traditional high street agent who was just opposite, and then an online agent. I know a friend of mine works there and runs it for one of the flats and the traditional one for the other.
Give him a name check. Come on.
So the online guys are, these was Rent My Home, which is part of the Sell My Home. No, they're part of My Home group. So it's sellmyhome.com or rentmyhome.com. And the traditional agent was TLC. It's in Earls Court. So directly opposite. Toby Brown there, directly opposite the flat. So it was interesting. It was the online guys. Obviously, one of the downsides, I guess, is you have to do your own viewings. But for me, that's fine. I don't mind doing that. I used to be an agent, so that's fine with me. Showing people around. The only issue is if someone doesn't turn up, because obviously the agent sorts all that out for you normally. But it was the time-wise was pretty much exactly the same timescales.
So they each let one property?
Yeah, each let one property.
Okay.
Yeah,
okay.
Yeah.
And can you be a little bit more specific on the saving in costs? I mean, obviously for you as a REIT, that's quite important.
The online agent, I think it was they were doing a special offer. There was £90 for the lettings fee plus extras for the AST. I think it was about £50 for the AST and a few other bits and pieces. The tenant paid for the referencing in the inventory, which I think's being taken away soon. And then the traditional agent was, I think it was a 9% letting fee, so pretty standard there. But then they do all the viewings, they handle everything, they're collecting the rent for us. So if there's any issues, they chase the tenant. With the online guys, we have to do all that. For us, that's fine because we have the experience of doing that. But if you're not an experienced landlord, you might struggle.
No. I mean, I could, of course, make a plug at this point for Vuber, who would, of course, get the viewings done for you. But nevertheless...
that would be beneath you, wouldn't it? Yes.
Of course. Thank you, Henry. But so you would probably be pretty evenly split on the benefits of either, really.
I think for us, it's pretty simple. I think as we grow, it's going to be interesting at what route we go down. So obviously the online guys, the benefits are it's cheaper. There are lots of technology. You can log in and you can do your own. You can check out the people who want to do the viewings. You can do your own property description and things like that. So you're more in control. So if you've got experience with that, I think it's fantastic. If you've got less experience of doing that yourself, then you might struggle a little bit. But then Rent My Home are very good at guiding their clients on how to fill in the description and all that.
So your thing would be that if you're you got some experience of it, then using one of these platforms is fine. Whereas if you haven't, you're better off, you think, using an agent. I don't know whether you have any opinions on this, Henry. I mean, obviously
What do you think? Do you think I might have an opinion?
I would imagine you have an opinion, but you're someone. I mean, I know the rental sector. Most of the experience you have on the professional side, your buying agency side, presumably is for people actually buying properties rather than renting.
So most of my business is acquisition, certainly, but I buy homes I exchanged on one yesterday in North London. As an investment property. We complete on that one today. I've got 5 more that are in solicitors' hands that will have been bought by people who are looking to get some exposure to property.
And would you point your clients towards
I speak
an
to
onliner, or would you?
I speak with letting agents probably every day. Mm-hmm. I'm speaking to somebody every day talking about what their service is, and with 1 or 2 very, very notable exceptions, I would always prefer a traditional letting agent with some high-tech support, doing a lot of the things that Tom's talked about. But I'm not a fan of the sort of DIY sales or lettings options. And I think that they need to be bright light should be shone on both models. As the idea of clients writing their own particulars, for example, I think is fraught with issues. And as somebody who sits traditionally on the other side of the fence and has to deal with the service, inverted commas, that one gets from the minority of true online agents. So that's people who've got no presence at all, no physical presence. Everything's outsourced. It's a nightmare to have to deal with. Their progression, whether it's sales or lettings, is inept. Frequently.
It is, because I think people forget that certainly on the buying side, only about 20% of the work that goes into a sale is involved in actually getting the offer. The really difficult bit, certainly the bit I remember as an estate agent, was the bit between when the offer is agreed and the exchange of contracts.
That 30% that falls through, and trying to minimise that, because people have then got financial skin in the game, as they say. They've got costs going out to lawyers, they've got surveyors. These obviously.
But we are trying to talk about lettings here, and obviously from a lettings perspective,
I have never. Again, I think it's helpful to people to understand that we started off when they first emerged, perhaps 5 years ago, talking about online versus high street. The vast majority of high street letting agents that I deal with have a significant online presence, and an awful lot of what they do is automated and made so much easier. So I can see and I can monitor 24/7 what's going on with my clients' properties in just the way that Tom sensibly said he has seen and that's really important.
That's interesting. So you find the communication, the ability to communicate with your agent
is making everybody's life so much easier. But the real bore for letting agents and estate agents is that as a result, people can see how much effort is required, and therefore what they can value that effort. And I'm afraid that they're by and large paying less for the service that they've traditionally paid for, because they can see quite how much A is being done, and B how much they're prepared to do themselves.
Yes, I can see a sort of menu-based system for these sort of things. I mean, I think exactly as Tom alluded to earlier, if you're very comfortable with the process and you understand how it works, you can just tick the bits you need and do the bits yourself.
The vast majority of landlords in this country have one property, don't they? They're running it and managing it pretty much on their own, so they need to be able to rely on legal advice from a lawyer, lettings advice when it comes to the lettings and management of their individual property. And whilst there are elements inevitably that can be automated, and some of it has been done incredibly efficiently, mentioning no names, Vuber, these are things that are important for people to understand, because lettings is so much more complicated than many people think it is.
Well, it's complicated. I mean, certainly in terms of what the property ombudsman does, the majority of complaints are now about lettings, simply because it's immediate and it can get very emotional very quickly, and it involves money changing hands. You know, the agent will often take money these days. I mean, to be honest with you, the only way in which you can be sure you're going to be okay is probably to make sure your agent is an ALA member or has something you can actually question them about. You know, I mean, I'm sure Henry will have an opinion on that, but nevertheless,
I like my cowboys to be regulated, I think, is the important thing.
Yeah, well, I mean, you know, I think personally, I come from I'd like to see all agents licensed, full stop, way of thinking. But there are, as I think Tom mentioned earlier, 2.5 million landlords in the UK, of which allegedly almost half don't have any form of agent input at all. And these days you can buy the forms online that are necessary. And it's fairly terrifying. I mean, 40 to 50% of landlords not using an agent. The majority of these are people who own one property. I can see why the problems arise, but it does seem to me that because the number of complaints are so tiny, I mean, the number that come in a year to the property ombudsman is something like 3,000 that are initially presented, of which only about 15% go to some form of arbitration of some sort. That's a tiny percentage of this type of, bearing in mind that the average tenancy length, I think, is about 19 months, or 19, 20 months. That's 2.5 million landlords, something like 5 million. It's bigger than the assisted sector now, the private rented sector. I mean, if the government has its way, they'll obviously put a knife to that and they'll be slicing it away and taking it down. I mean, Henry, if you were going to, let's talk about the way you live, because I know you rent, as I say, I've rented for 25 years and I found it a really good way to live. But I was lucky in that I found a place where it was clear, it was out in the country, not in London. The people that owned the house were never going to want to move into it or do anything else with it. So I knew I had a long-term tenancy on it, and I did. I had 6 or 7 years, you know, one after the other. If you could change, I mean, obviously the government have been talking about extending tenancies and things. What do you think about the idea of extending tenancy times?
I think I support much of what the government's doing. I mean, don't get me wrong, I have a huge amount of sympathy for the landlord sector. I think they've been treated abysmally in the way that this has all been rolled out over the last 5 years. But I do think that I certainly am not ashamed to stand up and say I was one of those people who thought that double-digit house price inflation in parts of London was not a healthy thing and not something that should be encouraged. And I didn't think that it was a level playing field between investors and homeowners, particularly first-time buyers, when it came to competing for a finite stock. And I do think, as I say, landlords have been really hard done by, having been told, for example, you can take your money out of your pension and invest it in other things. What about property? They asked. I remember sitting on a Radio 2 phone-in talking with a minister on exactly the encouragement he was giving. And then, of course, they whipped away the rug and changed the rules. So I have that sympathy, but I do think that we should be trying to make renting not just socially acceptable and a viable alternative for those, many of whom don't have an alternative, but looking at ways of making that more secure, making it safer, making sure that people can't scamper off with their money, making sure we have fewer of these ghastly examples that we read about in the newspapers. As you rightly say, you have the privilege of being able to sit on the Ombudsman's board, and you get to see exactly how few people do actually formally complain. But as we know, there's an awful lot of light and heat around.
Yes, no, that's true. No, that is true. But I mean, again, this thing of it is part of the English psyche. This everyone should be owning a property, and it's deeply embedded. But I don't think it's any coincidence that you go to countries like France and Germany, where they have very well embedded institutional rental sectors where pension funds will invest. I mean, I remember my father, bless him, bought a house in France in 1979 and he sold it in about 1999 or something. And he got about 5% more for it than he bought it for 25 years earlier. You know, you just don't get house price inflation in either of those particular countries.
Mistake. I still think that's the mistake that so many people, and forgive me, quite a lot of listeners, I think will be making, is that investing in property is not about capital appreciation, because many people
It's a home.
Many people will experience, as your dad did, the idea, and as in fact 53% of the UK population know only too well, their houses, after you factor in inflation, are worth less than they were than a decade ago. We sit, you and I, Ed, particularly, in the privileged position of being able to comment on the London and South East market, which has behaved very differently from the rest of the UK. But I draw your attention back to Northern Ireland, for example. Anyone who invested in a property there in 2007 is nursing a 50% capital loss. So investing in property is about the yield. It's like investing in any other asset, whether it's stocks and shares for the dividend, or whether it's putting the money in the bank for the interest that you do or at the moment don't get. And this idea that you can invest for capital appreciation is something I have to correct everybody on who mentions it, because that's not investing, that's speculating. It's absolutely fine, but there is a huge difference. We might as well take your money and have a jolly day out at Ascot races. That is the difference.
No, it's a very good point that in real terms, a lot of people's investments in property certainly haven't done very well. But it does come back to, and it does sort of really talk to what you're trying to do with Somerset Estates, which I think is one of the first REITs that's really tried to focus on just the residential market, and more importantly, put your money where your mouth is and put the properties in. If you're a pension fund, say in Germany, people build buy-to-let investment property. They build developments for buy-to-let. The pension funds know they're going to get a set yield. The tenants know they're going to get security. And because there isn't ridiculous rampant house price inflation, they know that there's no danger of them suddenly selling the development. It's done for a specific reason. Is there an argument to say that the way that properties are owned, i.e. if something like a REIT, I mean, would it be your end game to think about investing if you, let's just say the value of the REIT goes to 100, 200, 300 million pounds?
Fingers crossed.
Well, presumably at that stage, you can then borrow money to actually buy a build-to-rent development and get into that sort of field yourself.
We're looking to do that at the moment. We're trying to get funds together potentially to buy large blocks of flats, sort of 50 to 100 units along those lines. I think the way renting in the UK is going towards the more European model, where tenants are there for longer than the average. A normal AST 6 months, which is a bit, you can't put roots down or anything like that. So we're going towards the more European model where people are in there for a longer time and renting's not seen as a bad thing. I think part of the reason the governments have brought these changes in is to professionalise the industry somewhat. There are a few dodgy landlords, which you alluded to earlier, who don't look after their properties. There's a famous one in chap in Kent who hits the headlines every few months. Who,
on behalf of Ed's lawyer and the Viewer lawyer listening to this, I'm sure we won't be talking specifically about.
Well, I think we all know exactly who we're talking about. But anyway,
who doesn't look after his properties, doesn't look after their tenants, and that gives everyone a bad name in the industry. But I think the government are trying to shift away from the amateur landlord towards companies like us who have larger portfolios, who look after the properties properly, and the tenants know they can be in there for as long as they want. If there's an issue, it gets fixed quickly. Everything's well looked after. We do all the right gas safety, electrical checks.
That's actually a very good point, and I think even Henry would agree with me on this, that actually the idea of a utopian future where people could live in properties for a long time without worrying about and of course one of the benefits of renting, by the way, is that you tend to get things looked after. The roof falls in, your landlord fixes it. The boiler breaks down, the landlord fixes it. There are certain things, wonderful things about having a fixed cost every month, which people forget about when they're owning a property. And with, I don't know what the average service charge on a flat is these days, but it's pretty significant. But the idea of a utopian future where people can live in properties for a reasonable cost, the owners know what yield they're getting, there isn't house price inflation, and that the people who are then renting, because they can rent, they're not going to worry about looking at, exactly as you pointed out, Henry earlier, this speculative element that people seem to take, that the wealth creation in this country moves from being involved in property to actually creating wealth in the old-fashioned English way, which is clever thinking and entrepreneurs and doing business. And I do think that this country has lost out to some extent by people thinking that they're making their money. And a lot of people have. I've been lucky. I'm a baby boomer. I've been incredibly lucky. And it is pure luck. One of the things that always irritates me about property is people think they're being frightfully clever when they're making lots of money out of property, when all they've done is benefit from price.
All they just went to sleep, and when they woke up, it was worth more.
Yeah, I mean,
you're quite right, Adam. If you remove this element of people talk about rent as being dead money, don't they? And that's usually one of the first of three arguments against the merits of
which
renting.
I've never looked at it like that.
And it is frankly absurd, in my opinion. And I know lots of people listening to this will be shaking their fists, disagreeing vehemently. But as you say, I think the idea that once you remove the capital appreciation element, the gambling element, the speculation element, it's fine to speculate on property. I've absolutely no problem with people developing property, with property developers as such, changing the use, remodelling a property, making it more valuable, either to let out or to sell. That's absolutely fine and laudable, and people should be encouraged to do it. I think that's what you're talking about, with people actually doing something and grafting and creating value. But this idea that you're paying rent, and whilst you're paying rent, you're going to somehow forego and miss a turn on the monopoly board, and as a result, you'll find it difficult to buy back in, I think is about to be dispelled pretty significantly as the market over the next 18 months to 2 years gives a lot of people a bit of a slap in the face.
Well, it will, and I think hopefully it may perhaps turn people. I mean, also, if you look at Brexit, I mean, I'm deliberately not going to talk about that. But the point is, if we do end up becoming, for a short period, slightly more inward-looking, the fact is people may have to look for better ways to make money. I can only talk from my own example, having been sitting in a business for a very long time, running it and having a great time. Douglas & Gordon is a fantastic business, and it's going in a great direction now. But the point is, having gone out of that and started my own business up, I cannot tell you the excitement that's been generated doing that. And I just think I sort of wish I'd done it 40 years ago, and I think perhaps what's happening at the moment may make people think about changing that. The best example I can perhaps think of is the change in car ownership. Something like 85-90% of people who buy cars now do it on these PCPs. And they simply rent the car effectively for 3 years and then give it back. Well, you don't find them saying that's dead money.
No, well, as many people who do that observe, they are buying a depreciating asset. Why would you want to buy something that's going to be worth less tomorrow? And it's the same with many people who are looking at buying property today, whether it's to invest in or whether it's to live in. They are worried that what they buy today will be worth less, not just before, but also after Brexit.
Yeah. I mean, I think, Tom, a lot of people would not understand that when they're investing in a property to rent, although it's great to have a yield, the majority of people who rent property have always historically looked at capital appreciation because the rent they make goes into maintaining the property.
I mean, when we look at a property, we don't look at the capital appreciation. Something that does annoy me is we see these companies saying invest in property, and look at you can get a 10% return, then you look at their figures, and only 4% or 3% is the actual rental income, and 7-8% is the capital growth. So they've included that in the figure.
Hope value.
Yeah,
the hope value.
That's nonsense.
Yeah, that infuriates me, because we're very honest. We're saying, the yield is we buy for yield, really.
Give us an example with Somerset Estates. What is your target yield?
So we've been buying a lot down in Margate and Ramsgate and Thanet, where our target yield down there is 6-7%, ideally higher. Before prices down there have gone up quite a bit recently, so before we were getting 10-12%, but now prices are a bit higher. We're not getting that. In London, it's probably a bit less. Because the price is a bit higher.
How much less?
4%, 3-4% in London.
And what about your one in Henry? You exchanged on one yesterday. What sort of target yield of your?
Well, I'm thrilled to hear Tom's description. That's what investing in property should be about. I can remember I came into the business obviously a lot later than you, Ed. I've only been doing it for 35 years.
I can see a lot of grey hair from where I'm sitting, listeners.
The wise old birds that bounced me up and down on their knee told me about the business that back then told me that investing in property should generate 6% or more. The costs, as you related earlier in this piece, property is very illiquid. The costs of sweating out that yield are significant, and let's remember, yield is a reflection of the risk you're taking. If you're going to get 4% from stocks and shares, and you're going to get roughly 1%, let's say, if you put your money in the bank, considering the risks you're taking, the idea that people should accept 2 or 3% gross in central London, as they have done for the last probably 18 months to 2 years, I'm with Tom. 6% is what's required. And to answer your question, what have we got in the one in North London we exchanged on yesterday and complete on today? We'll get 5.1%. And the next one that we hopefully will exchange on later this week, which is outside London, in Stevenage, again, an interesting, but probably we haven't got time to deal with this morning, this idea of talking about converting commercial properties into residential. That's a block that's been converted, ironically, the old land registry building, and that's showing an 8.2% gross yield. So it's all out there, but it does come down to this, how you look at it. Property investment, as I say again, is about the yield, not about the potential upside and capital appreciation. If you get that, frankly, that's a bonus.
No, I suppose that's the benefit of having someone like you, Henry, acting for you, is that hopefully you'll spot something that's going to do a better deal. And I think it's also one reason why perhaps having property experts running something like a REIT, it's not just a financial operation. Obviously, I would imagine you have all sorts of people behind you looking at the detail. And from what I can gather, it was a very expensive process in setting up. But I would like to think that the idea that if the government wants to see the business being professionalised or the industry being professionalised, doing it via things like REITs has got to be a very sensible way of doing it. Are there any other setups, any other ways like REITs that people that landlords can think about?
There's a couple of other REITs. I won't mention their names, obviously. But there are. I'm speaking to.
But I meant structures rather than REITs.
There are a couple of other ones. There's a very popular one at the moment, is where if you have the properties in your own name, you then become an LLP for I think 3-4 years, and then you become a limited company. You convert. There's a lot of people out there who say it's a good way to wash away the capital gains tax, potentially. And I also heard an accountant the other day say that you don't have to pay stamp duty as well when you do the switch at the end. I've run this past our accountants, and they say that that's not true at all. But I'm not, another accountant might know better than ours. But that's one way of doing it. I think that's pretty much the only other way, really. Though you can convert obviously to a limited company if you have them in your own name. You have capital gains tax potentially to pay. You've got stamp duty. You've got all the legal fees. One landlord I spoke to the other day said it's going to cost them £50,000 to do that, just in legal fees and accountancy fees, which is quite a hefty chunk of money.
Okay.
Yeah.
Well, I think it's one of those sort of things which really has to potentially look at volume. I think this thing of buy-to-let developments is very difficult, because I think one of the problems that the people who look at long-term rental returns on developments have is that, or when they're trying to buy land for development, is that, of course, the people who are going to be selling the developments have a much shorter-term view, so they can pay more. And the problem I've heard, I know Harry Downs is the MD of Fizzy Living. I was talking to him quite some time ago, and he was saying that he was fed up with always being overbid by the developers, even though the people who were selling would love to have seen an organisation like that taking a long-term view, because it's all about the money. And I don't see that changing. Well, maybe that will change now, exactly as you've just articulated, Henry, with prices doing what they're doing in London at the moment. Maybe that'll change. But you've got to remember that outside London, prices aren't going down. I know in real terms, by the time you've taken inflation and you look long term, perhaps it doesn't look quite as good. But what do you think? I mean, if you take a look at what's happening outside London, it's a very easy thing. I don't like talking about house prices, but everyone wants to. In terms of rental values and sales values. And I know there isn't any one-size-fits-all policy, but if you're looking outside London and the South East, do you think the picture looks quite rosy?
Well, I have 2 flats in Newcastle in solicitors' hands that we're buying for a client at the moment. Their capital values are, if you're really optimistic, they're flatlining. But now, as in other parts of the country, you can get a good deal because there are people who've made a mistake and jumped the wrong way. Rents seem to be much more stable in the northeast, and there are lots of reasons why that is the case, and why I suspect, in my opinion anyway, that will continue to be the case. There are areas of the country like Manchester where the party is in full swing. People ring me from Manchester on a weekly basis with exciting opportunities to be able to buy things that perhaps give the impression they think will be worth 1 or 1.5 times as much in 12 months' time, where the yields, that you don't need to worry about the fact you're only getting a 2% or 3% gross yield because the capital value, Henry, is going to be amazing. I'm afraid I've got a file in my email system described as snake oil salesman, and they all go into that. What starts in London historically, I'm sure I've got this from you, Ed. It sounds so wise. It must have come from you. What starts in London will ripple up the M1 and up the M6, and it may take until this time next year or Christmas 19 before it gets to Manchester and Leeds, but it's coming. And if people are happy to continue drinking, that's up to them. But I think they may well find themselves making a mistake.
Henry, that is. I mean, I've always found London difficult because, of course, it is unnaturally distorted by the figures at the top end of the market, and very, very clearly the sort of people who were buying in the UK for whatever reasons have been spooked and haven't been buying, and you've had an over production of stock for these people to buy. So you've got a natural sort of perfect storm. But if you look around at the average house prices in London, and it's very difficult to see that the house prices the house prices that have been falling in London, and it's very easy for us to look at 15 to 20% falls for prime central London. But that isn't going to ripple all the way out there, is it? I mean, for
I think
most...
it will do. I mean, the flat I exchanged on yesterday, which I keep banging on about, but is a classic case in point, was launched 12 months ago at £855,000, and we've paid £700,000 for it.
But you'd always get...
I've agreed a sale yesterday that started off 12 months ago at £755,000, and we've agreed it at £610,000.
But I mean, that doesn't surprise me, because is that a new build?
But that surprises...
Is that a new build?
No.
Okay.
But it surprises an awful lot of people. And the point is that this market and the uncertainty that is engendered for all sorts of reasons, not least of all the B word, I think that in a good market, a strong market that's perhaps people operating in the London market in the southeast experienced in 13-14, the margin of error, the disparity between what a good estate agent or letting agent might have achieved and what a bad or poor letting agent or estate agent might have achieved on their worst day was perhaps 5% either way. And I think that gap now is at least 10% either way. So the spread between the opportunity to make a purchase at the moment is quite a lot. 20%.
Yeah.
And I suspect it will grow. Now, when you look at other areas of the country, and I'm so pleased you do, because let's remember, there are huge amounts of the country away from London who will be scratching their heads when we talk about double-digit house price inflation, for example. If capital values continue to rise as they have, then investors are going to look at places like Manchester and Leeds, and they're not going to get the 6% that Tom talks about, I think, very sensibly. They're not going to put up with getting a yield of only 3% gross, and there are only 2 ways you can address that as a cold-hearted investor. Either you've got to come up with a way of increasing the rent that's being paid, so you eke out another bedroom, for example. Let's face it, we all accept, I think, that wage inflation is not going to solve that problem. But the most obvious solution is the fall in capital values, and that's why, despite the enthusiasm, much of which I admire in these parts of the world, I am very, very dubious and very suspicious when offered those kind of opportunities?
Well, it'll be very interesting to see. I mean, we can talk about this for hours, and we're coming up to over 50 minutes. We've got just a few minutes left. Do we think perhaps that some of that rental price increase might be achieved or might come about after the tenant fees ban? I mean, that's obviously due in next year, isn't it? I mean, that for some, it was quite interesting to hear the countrywide figures. I know it's been a bit of a car crash recently, but it was very interesting to read in their latest release, which was, about a month ago, that for every pound they earned, something like, I think, 41 pence was from referrals.
I think tenant fees, Ed, are a zero-sum game. It's a bit like the changes to stamp duty, and I know I'm something of a contrarian on this, but as somebody who very vocally campaigned for a change to the accepted norm where letting agents were making themselves more competitive when it came to pitching for business from landlords by lumping the saving that the landlord was making onto the tenant who had no option but to pay it. I don't expect tenants to end up being better off, so it will still have to be paid, but I'm a huge fan, as I'm sure all people connected with the Ombudsman are, of transparency and people having to pay what the going rate is rather than smoothing it in and making up profit coming from backhanders from lawyers or brown envelopes from surveyors. I don't think that's something that should be encouraged, and I'm delighted to see it, and I look forward to it coming in. I wish they just get on and deal with it.
Yeah, I think everyone's for transparency. Tom, what do you think about the ban on lettings fees?
It's going to be interesting. It's next March, isn't it? Next spring, around next spring, yeah.
Anything else going on in next March? I can't do that. 29th of March?
Might get buried, yeah. What I find interesting, not many letting agents have told landlords, have spoken to them about it and said, what they're going to do. No one seems to have a plan in place, how they're going to cope with it, if the fee's going to be passed on to the landlord or the agent's going to, suck it up and pay it themselves. If it's passed on to the landlord, what I fear is that the landlords will simply put the rents up or, try to do something to increase the rents to cover these extra costs. For us, I always encourage our agents to minimise these. It seems a bit unfair. We choose agents who don't necessarily charge ridiculous fees to tenants, and I've even said to some of our agents, we'll pay those fees if the tenant's a good tenant, they're going to sign a long contract. We're happy to pay those fees for them, referencing fees, because from the way I see it, the referencing is for the landlord, not for the tenant. You want to make sure the tenant is a good tenant. There's no reverse referencing to see if the landlord's a good landlord. There's nothing the other way around, which seems a bit unfair.
Which might be changed if they were regulated and they can go and look them up and that sort of thing. I agree. I mean, I do think one of the downsides potentially for me is that if you're a tenant, some kind of deposit or holding deposit always meant that you had a hold on that property, and the tenant and the landlord knew that you were going to rent the property. I think the idea that tenants can go around looking at 5 or 6 properties and saying, yes, I'll have them all, on the understanding that one will come, they'll decide to go for one.
You're talking about the deposit.
No. I'm talking about
deposit.
I was talking about a holding deposit, because I think one of the issues that came to light in all this was obviously that some unscrupulous agents were charging absurd amounts of money to.
Yeah, I had clients who were being asked to put down £2,000.
Absolutely, which is madness. I mean, it's fairly commonplace for people to say, can you put a week's rent down just to hold it? And what worries me a little bit, I think, is that if tenants can go around putting offers on half a dozen properties and creating lots of hassle and paperwork on 6 properties, and then decide, well, actually, no, I only want that one. That would sort of be the same sort of thing as gazumping, gazundering times.
But Ed, it's absolutely in the landlord and their agent's gift to make that, to telescope, as it is on the sales side too, to telescope that period. I come into your letting agency, I want to rent that property, you give me all the paperwork, you check me online, it could be done in an afternoon.
Yeah.
This idea that it takes 2 weeks,
that's the technology which I hope
Fred Flintstone does.
That's the technology which I hope will help. I think technology can come to the answer, can come to the rescue for that. Well, look, we've covered a lot of topics there. I really want to thank you guys for, as we said, we could carry on talking about this for ages, really. And I think it would be fair to say that what Henry doesn't know in terms of what happens out there, I'm always staggered by I think a lot of our listeners will be absolutely staggered by how much time you spend on Twitter and how much research you put into what you put up on Twitter. I'm amazed, really. I mean, congratulations to you. I know you're one of the, you have a big following, and it clearly does you a lot of good, which I think is great. It's a really good use of Twitter. If people want to see how it works properly, go and have a look at @Henry_Pryor. Is it?
At Henry Pryor.
At Henry Pryor. Okay, I'm sure there's a Henry Pryor with an underscore somewhere who's keen. And Tom, I think what you're doing in terms of pushing the barriers back for landlords who need other options. Landlords, I think what I would perhaps characterise what you're doing with the REIT is where landlords want to continue to keep an income from property, they have options.
Yes.
And I don't, even now, if a landlord wants to sell his property because he's feeling that the Section Section 24 changes will mean that they'll be losing money, they don't want to sell because they've got nothing else to put their money into. There's still that situation. 10 years we've had that. So if anybody wanted to find out any information about what you're doing, where would they go?
So our website is a bit of a long one. It's www.somersetestatereit, that's reit.co.uk. That's the one.
Okay. Well, I'd like to say thank you very much for coming in and taking the trouble to talk.
Thank you, Ed.
This is Ed Mead, having interviewed Henry Pryor and Tom Tennant. And you can have a look at this at viewber.co.uk, but the chances are you'll have found it because that's where you'll be listening to it from. Thank you for listening.
Okay. Very kind. Thank you so much.
Okay, thanks, guys. That was a bit of a mishmash, but actually I think we got there in the end.
Yeah, thank you.